And the sources dug into 5 big upcoming projects that seem to represent this next phase. Let's get into them. First one, Allevia.
Okay, Olivia, this one's from UEM Sunrise. They're a major player, huge track record in Mont Kiara, so that brings a lot of brand trust.
And their angle for Allevia.
Their big pitch is privacy. They're calling it a new haven of privacy in what's obviously a very dense area.
Privacy in a Mont Kiara condo. How are they doing that?
Well, the standout feature, based on the materials, is the really low density, only 4 units per floor.
Ah, okay. That is low compared to the usual.
Yeah, and each of those 4 units gets its own private lift lobby, so it feels much more exclusive, almost like a landed property in the sky kind of vibe.
Yeah.
It's also got Green RE certification, which appeals to a certain buyer.
What about the units themselves? Size, target market?
They're focusing solely on larger units, starting around 1,700 square feet and going up. So
Okay.
definitely targeting families,
Yeah.
upgraders who want space, not really aiming for the smaller investor units.
And the price point reflects that.
It does. Indicative pricing starts around RM 880 PSF, going up to maybe RM 1,200 or more. So you're looking at starting prices around RM 1.5 million plus.
Okay, let's put on the investor hat for Allevia. What are the pros and cons?
Pros. That strong focus on privacy creates a potential niche for high-end tenants who really value it. Could mean premium rent, lower vacancy. The developer's reputation is a big plus for security. And importantly, it's completing relatively soon. Q2 2025 is the estimate, so potential income faster than others. Cons. A high price point due to the large sizes means a bigger initial investment, and it narrows your pool of potential tenants and future buyers to the very affluent. It's also competing with other luxury options, including UEM's own portfolio. The bet is really on whether the market will consistently pay a significant premium specifically for that level of privacy.
Makes sense. Now, what if I'm looking to live there as a resident?
Well, the privacy is the huge draw. 4 units per floor, private lifts. That's a major lifestyle upgrade. The units are genuinely spacious for family living. Practical things like dual entrances help too. Amenities sound good, rooftop gym, lounge, potentially great views.
Downsides for a resident.
The main one is obviously the price. It's top tier. And while your building might be finished soon, you'll still likely be living amidst ongoing construction noise and dust from other sites in the area for a while.
Okay, next project. This one has a name that definitely shouts luxury. Pavilion Mont Kiara.
Yes, the Pavilion brand is absolutely central here. It's a joint venture Pavilion Group and WCT Land, both big, reputable Tier 1 developers.
And the concept.
They're pitching it as a cosmopolitan city of affluence. Think resort-style living, high-end services, leveraging that Pavilion association.
How does their unit strategy compare to Allevia?
Very different, actually. They've gone for a much wider mix. Units start from around 1,000 SKU 2-bedders and go all the way up to massive 6,000 SKU 10 houses.
Ah, so they're casting a wider net, targeting different buyer types.
Exactly, which means different potential tenant profiles, too. Pricing reflects the brand, though indicated at RM 1,200 plus PSF. So even the smaller 2-beds are starting around RM 1.2 million. Completion is looking like 2027.
Investors' take on Pavilion.
Pro number 1 is definitely that blue chip brand. It attracts a certain caliber of tenant and buyer, potentially offering better capital preservation, maybe easier resale down the line. The diverse unit mix gives investors options at different entry points, and the developers already have Pavilion Hilltop nearby, which has done well.
Cons for the investor.
Well, it's the priciest of the bunch on a PSF basis, which could squeeze your net yield. That wide unit mix also means you've got competition within the same development for tenants. And you're paying a premium, a sort of brand tax. Your investment relies on the market continuing to value that Pavilion name highly in the future.
And if I want to live there, the resident appeal.
It's largely about the prestige, the status. Living in a Pavilion building is a statement. They're promising hotel-like services, concierge, high convenience. Good views are highlighted, Palace, KL Skyline. Some larger units get private lifts too.
Any potential drawbacks for residents?
The overall density is higher than Allevia, so it might feel a bit less exclusive, especially if you're not in a unit with a private lift. That mix of smaller rentals and large owner-occupied units could also create maybe a more transient feel compared to a project focused purely on homeowners.
Okay, moving along. The MINH, this is another one from UEM Sunrise, right? How's it different from Allevia?
Yes, UEM Sunrise again. But the MINH is positioned differently. It's actually the first project in their new ultra-luxury series called the CL Lub Edition.
Ooh, fancy. What's the core idea?
The concept is Indochine-inspired nature homes, and the big USP is the location is on an elevated 6-acre site right beside Mont Kiara Forest Reserve.
Ah, so hilltop location, big views.
Exactly. They're really leveraging that site advantage for unobstructed panoramic views and a sense of tranquility. Plus, they're wrapping it in this specific kind of artistic Indochine theme.
Unit strategy, similar to Olivia.
Yes, focus on space again. Layouts start from about 1,606 UT up to just over 3,000 SICUA. They're describing them as bungalow type or semi-D type living in the sky. Indicative pricing is around RM 960 plus PSF, so starting totals around RM 1.4 million. Completion is estimated for late 2026, maybe early 2027.
Okay, the MINH from an investor angle.
Pros. You've got the strong developer, plus this new ultra-luxury branding push. The unique theme and that defensible hilltop location with guaranteed views make it stand out. It's less likely to become just another generic luxury condo. And this is important. The market seems to love it. The first tower apparently hit 70% take-up before the official launch.
Wow, 70% pre-launch? That's strong validation.
It really is. It significantly de-risks the investment compared to something selling more slowly. Cons. Again, high investment quantum due to the large sizes. The specific Indochine theme, while unique, might be a bit niche for some tenants compared to more neutral luxury. And elaborate facilities could mean slightly higher running costs.
And living there, what's the experience the MINH offers residents?
You're buying into exceptional views and a really distinct atmosphere. The theme, the facilities, the location next to the forest reserve, it promises a very serene, beautiful living environment. Low density and large layouts offer exclusivity and privacy. Some units have private lifts too. Facilities sound extensive and unique. The sources mention a spa hut, kickabout lawn, tennis court, a whole lifestyle package.
Downsides for residents?
Maybe walkability. Being up on a hill might make it slightly less convenient to just pop out compared to places right in the thick of things. And you really have to buy into that Indochine theme. It's central to the whole project's identity.
Got it. Next one, Mont Kiara.